been seeing a slew of IPOs, new listing on the bourses. We also have another candidate which is all set to hit the market, and that is TVS Supply Chain Solutions. And we have the management of TVS Supply Chains joining us on the show. We have Mr. R.Dinesh, who is the Executive Vice Chairman, and Mr. Ravi Viswanathan, who is the Managing Director of at TVS Supply Chain Solutions. A very good afternoon. Thank you so much, gentlemen, for joining us on ET Now. This is Cheryl on the other side. And if you could actually dive in and dwell in more about your company, if you could talk to us about your business model and what is TVS Supply Chain into?
So, TVS Supply Chain is an Indian multinational, which is actually with a focus on the customer and the capability. We had acquired companies in the developed markets for making sure we develop the capability to be able to service and give solutions for our customers. And that's the core and the basis on which this business has been built, with a focus on the 3 C's: the customer, the capability, and the country.
Okay, the next question, Ravi, if you can take this up, because earlier the fresh issue was around 2,000 crore rupees, which has now been slashed to 60 crores, and also there has been a cut in the OFS portion, which back in earlier was 1.42 crores shares from 5, and that has been cut to 5.9 crore shares. Is this because of the valuation concerns, and what are the reasons behind this change?
Yeah, good afternoon, Cheryl. So let me first take off from where Dinesh spoke about. This is a company which is focused on providing, supply chain solutions to very large Fortune 500 customers. We have over 72 customers as of FY23. The IPO that we have filed is for 600 crores of primary and about 1.43 crores shares of secondary. And we have raised capital in between at about 417 crores. So overall, if you look at it, I think our capital raise plus the capital that we have raised outside of the IPO is over 1,000 crores of primary.
Right. Let's talk about the objective of the fresh issue. I believe that is for the repayment of debt. So if you could tell us what will be your debt position after this, and also what will be the annual interest cost savings due to the repayment?
Fantastic. So I think, one of the things that we want to achieve is to reduce all our external debt borrowing. And what it does is really give us the headroom for growth. So that we are only looking at borrowing working capital as we go forward. And that is really something which is very critical for us, because we engage with large Fortune 500 customers, and the IPO really helps in positioning the brand. It's the transparency of the financials and the governance which comes into play. So I would say the IPO will help on debt reduction and create headroom for us to grow. And second is the visibility of the brand and the transparency of all of the accounts and the governance that comes along with it, which will help us win customers going forward.
Okay, Dinesh, if I can come to you, and wanted to ask you on the financial front, because there has been a turnaround in the past 2 to 3 years, if we see, because back in FY21 and 22, the TVS Supply Chain Mobility was actually incurring loss, and from that, the company has turned profitable. What could be attributed to this change, as well as going ahead? How do you see the profitability sustaining at these levels or even growing?
See, as you mentioned, I think if you look at from 21 to 23, our revenues have grown significantly. Our EBITDA has also grown significantly, and therefore the PBT is also reflected there. Our focus is on in the past, the focus has been on making sure that all 3 parameters are looked at, and that's how we see the business.
Right. Let me then dwell in more and let's talk more on the numbers then. Your margins have been hovering around in the 5 to 6% range. Is there any scope for us to see margin expansion, at least going ahead, at least how the next 2 quarters are panning out for your company?
So let me take that question, Cheryl. One is that if you look at our numbers in FY20, our EBITDA numbers were about 243 crores, and we have expanded that to about 683 crores by FY23. On the back of a very solid revenue performance too, when we closed FY23 at 10,235 crores. And like you rightly said, the company has turned a corner and we have delivered about 41 crores of PAT. You did ask me in the previous question what will be the debt repayment and what impact it will have on the interest payment. We believe that will be about 107 crores impact on once we repay the debt, the interest reduction would be about 107 crores, which is what we have currently in our FY23 numbers.
Okay, gentlemen, we'll let you go on that. Thank you so much, Ravi and Dinesh, for joining us today on ET Now, and wishing you all the best for the upcoming IPO.